Hello and good morning, everyone. Welcome to this live intraday strategy webinar. Today is Thursday, February 2nd. Michael Boutros here with you this morning. Alan, Carlos, Doug, Gary, Conwall, Pete, Pooja, Saful, Ziad. Great to be with you guys here this morning. So, what a day it was yesterday. Obviously, the FOMC holding policy as expected, but sort of an interesting tone that we took. The dollar really tried to mount an assault but failed miserably, and it failed right ahead of median line resistance. We'll go over the near-term charts in a moment. That shifted the focus once we got the FOMC out of the way into the BOE, which came out this morning, obviously with a hold. Some interesting commentary on that front as well, really prompting some weakness here. It's not necessarily that they're dovish. My interpretation, or some of the bank research we've been reading, has been suggesting that it's not as hawkish as the markets were expecting. So, you saw some upward revisions to GDP forecasts moving forward. CPI outlook was broadly unchanged at 2.7% in 2017, 2.6% in 2018. Nonetheless, the sterling crosses have broken near-term support and are on the corrective move now. So as far as the bullish invalidation levels, pretty much across the board they gave out. So on this move, we definitely don't want to be fighting it just yet. The broader picture I still think remains unchanged, but near term, on some of the crosses, we're even posting some nice outside day reversals off resistance. So we'll go over those sterling crosses as well. Sterling dollar, sterling yen, sterling kiwi. Obviously, tomorrow is non-farm payrolls, so we got Aussie dollar on check, Euro dollars on the list, Kiwi dollars on the list, dollar yen is on the list, and we'll hit the commodities, gold, crude, silver, and nat gas, specifically crude and silver at resistance right now. Gold made the breakout as well. So we got a lot of breakouts early in the month, guys. Keep in mind, we're just opening up February trade. We're heading into the end of the month. So Rube wants to take a look at copper. You jot that down. Haven't checked it out this morning, but we'll take a look. Okay. And that's what's on my list. So if there's anything else or any other questions or trade setups you guys want to review, as always, feel free to post them on the message board. So we are getting some comments, by the way, as we're going through the webinar here. We'll be getting some comments from Carney, who's on the mic. Just some highlights here. Carney saying that he sees downside risk to global outlook. He's been saying some things with regards to Trump, saying that fiscal stimulus is to boost global growth outlook. Carney doesn't rule out rate rise ahead of the Brexit, says less wrong on Brexit forecast than others, sees potential for sterling to strengthen on Brexit news. Carney also saying that de-globalization is a risk to global growth. We'll see some more of these comments coming through on the headlines here. Sarub says, can we look at gold after the DXY? I'm short. Sure, we could take a quick segue to the commodity, Sarub, but let's start off with the dollar index. So here's where the dollar index is to start off the week, or to start off the session rather, guys. We talked about 99.53. That's still a big level for me. We haven't closed below it, excuse me. And we're still within the confines of this descending formation. This is what I was noting is why I'm not too excited about really getting on board with trying to press, or exert too much of a dollar short position. We're at the lows. There's not too much space to the downside before you start to run into that median line, which has caught all of these lows. If we turn and we end up making a low ahead of that lower parallel, guys, that is a raised floor and would certainly be near-term constructive. That said, the game plan was to sell a rally while below 100 spot 37, which was our bearish invalidation level. You got a rally into 100, that pulled back, and here we are drifting back below support. It's really the near-term chart that's the tell here. Okay, so you're getting some divergence. This is a 2-hour chart into these lows, price action making a lower low, the oscillator making a higher low. You do have a 2-hour trigger here as well. Right here. That I'll be watching into the U.S. trade session. So you can envision a scenario where you make it back through the monthly open at this point. The 50 line with a break of the upper parallel or this trigger on divergence would certainly be a near-term sort of corrective play. This you want to scratch at this point. And here's what it looks like on the hourly. Still seeing that divergence manifested there as well. So I'm cautious. I'm cautious. The game plan was to sort of sell a rally, like I said, into 100 spot 43. It didn't get quite that high. There's the FOMC sell-off, and here's the drift lower. Not really getting that break to the downside, that acceleration that you'd want to see. Key support, if you remember, is going to be that 98.87, 98.70 region, the 2016 Open. Obviously, the 1618 extension off the high, the lower parallel over the next few days, near term, still do think you can get a little bit of a rebound here. So I'm cautious on the dollar index, Sarub. If you're holding shorts, if it breaks through the monthly open, and then when I say monthly open now, obviously I'm talking about February, just yesterday's open, you know, look for a possible recovery back towards the highs that we made yesterday on the FOMC. So the levels for the dollar index remain unchanged from the 31st here from this update. Same levels we're looking at here. And here's the daily chart. So we're basically drifting right below this region. And you have non-farm payrolls on tap tomorrow. Okay, so there is, the risk is there, let's say, for event risk coming up. Any questions on the dollar index? Again, look for a possible recovery. Wouldn't get too excited on the long side while below 100 spot 43, but still looking for a possible recovery here. Again, keeping in mind, non-farm payrolls, we're expecting a print of 175,000. That's from 156. Unemployment is expected to hold at 4.7%. The ISM non-manufacturing composite also comes out shortly after. You're not really going to want to stress that. But as always, we're going to be wanting to look at the participation rate, guys. And labor force participation has been something that has sort of been an ongoing theme, underlying theme, as we continue to see the downtick in unemployment. Okay, moving right along. Let's jump really quick into gold here and get that out of the way. Sarub, was that for you? You are want to take a look at the gold. Are these levels good levels to buy gold? If yes, which is the level is bullish in validation? Conwall, if you haven't gone on the long position for gold yet, no, I wouldn't want to chase it up here. Look, I'm not a... Let me take a step back. Hold on one sec, Conwell. I'm going to get to your question. Here's number one was dollar index. Gold is number two. Here's what I'm looking at with gold. I'm just going to draw it straight out for you. The daily chart's what you want to pay attention to here. Look, this was a big region for me at 1220, okay? A 38.2 retracement. You had a lot up there. You had divergence on the way up. The turn here was beautiful and well documented. We were looking and played that whole thing, right? Now that this rally is surpassing 1218, which objectively would put us bullish, you're still testing the underbelly of this parallel. And I don't want to get too excited. You have the 100-day moving average right here as well. Could you get some kickback from here? Sure. Is it a constructive trade? You betcha. I mean, it could be a fake out here, specifically if you get some ongoing divergence. That would be a third divergent point. You know my mindset. We talked about this yesterday. I was looking for a new low. I was looking for a new low near 1171, 1177 on the near-term charts also came up as an area of interest for possible exposure on the long side. I even put a piece on daily FX here. Absolutely wrong. Okay, we were absolutely wrong. There's the break that invalidated the whole game plan, and that was descending slope that we were looking at yesterday. So now that we've made it through our way up, you know, look, you have maybe another couple of dollars to the upside, Conwall. Okay, he says, I want to short. So if you want to fade the position level of which I'd be starting to look is at that 100-day moving average, just a little bit higher near 1226. And I'd look for exhaustion. Again, Conwall, playing these reversals is never really an easy play, right? So we want to wait for price action to really start to tell us on the short term we're seeing some exhaustion. That being said, we've got to reassess the situation here on the near term. So let's clean this up real quick. Don't need this, don't need this, don't need this. This pitch is out and done. You can constitute that as a false break. We're going to go ahead and just take that new slope. See if this gives us anything. Hey, look at that. Touch that point right up here. Don't need that. Don't need that. I'm hesitant to get rid of this. But at least for now, I'll just get rid of this 50 line. I don't think we need to use that. Complicate things. This retracement's null and void. This extension. Don't need that, don't need that, don't need that. Okay, so just based on some median line analysis here, we're not even taking into account horizontal sort of key levels. And the retracement obviously is null and void. Now we've made a new high. So let me just leave that 38.2 because it did catch the lows here. Don't need that, don't need that. There we go. Cleaner chart for you there. So look, you could be looking for some near-term exhaustion here. Momentum is starting to travel into overbought territory, not necessarily something you want to fight. Let's look at the near term. It's 2 hours, a 1 hour. Yeah, I wouldn't want to fight it, Conwall. I mean, look, you made an objective break of the weekly opening range with this move right here. You tested as support and you're rebounding higher. I would be looking for some exhaustion. So if you start to get some divergence in momentum as it travels into the upper parallel here, again, just finding the inflection point, which is, again, just a basic parallel off the lows here, suggests you might want to be looking for some near-term exhaustion. Also, you have that 100-day moving average. You have former slope resistance, or former slope support rather, now resistance. So yeah, I think you would look for some near-term exhaustion to get bearish. And by the way, even if we play it as a pullback from a scalp standpoint, that's the way I'd play it. I wouldn't be playing it as a reversal. To get bearish, I would need to get back below the monthly open, that basic trendline support off of that Friday low. Does that make sense, Conwall? Immediate focus is higher. We'd be looking for exhaustion just higher from where we are right now, near 1226, that 100-day moving average. Again, a break below this parallel is what's needed to trigger a bigger pullback. But I still can't get too excited about the long side until we get back above that parallel, that 100-day moving average. Just a big inflection point. Just look back in price action. So you can see some long wicks into this region. Let's see what today's close looks like. Conwall says, yes, sir. All right. Good stuff. Let me get rid of that 52. All right. So that is gold. Number 2. Let's take a quick segue back to the sterling crosses. I'm not going to lie to you. I don't really even want to touch the sterling crosses right now. I either want to wait for this pullback to get deeper, or if we get a near-term rally in price, it might actually still be a short opportunity. But a deeper pullback, I think, in the sterling crosses is what's going to give us the opportunity to get back on the long side. Here's what sterling looked like last night, and here's what sterling looks like today. So last night we were talking about this resistance range, okay? 126.75, it's the opening, excuse me, it's the January highs. It is also the November highs. It is also the basic 236 retracement of the entire decline off of the Brexit move. So you were at resistance for the British pound heading into the BOE and Super Thursday. Obviously, again, we saw those changes to the outlook. Inflation at 2.4% on the 3-year policy horizon, which is, pretty much in line. One thing you want to keep in mind that the unemployment rate was the equilibrium is what they call, which is what we call here the natural rate of unemployment. They call it equilibrium, whatever. Was lowered to 4.5% from 5%. So there is an improved outlook. He did cite the possibility of moving on rates even this year, which is something the market does not have priced in at all. So what does all this mean? All I'm trying to say, guys, is that the fundamental picture didn't change all that much, in my humble opinion. Um, so yeah, maybe they weren't as hawkish as the markets were expecting, but I think, at the end of the day, this larger pullback will largely be something that will give us an opportunity to get back on the long side. So at this point, here's what the sterling looks like on the daily chart. I do want to note that at this level, or at these levels, if we were to close at them, does constitute an outside daily reversal off resistance. Okay, so outside daily reversals off resistance tend to be bearish developments, which for me shifts the focus and suggests that we have a larger correction to the downside here before you move higher. Also note on the daily chart with the British pound, if we close at these levels, and this is all contingent on us closing at these levels, you're marking some divergence in price action. Price action made a higher high on a closed basis. The oscillator made a lower high. So you're getting some signs of exhaustion. You're getting an outside reversal off resistance. This is also the December high day close. So there's a lot to look at here. And it's suggestive to me, like I said again, that the near-term risk is weighted to the downside for a little bit of a corrective pullback here in the sterling. Inevitably looking to buy, but right now, I still think that we could see a little bit of a drift lower. Here's what it looks like on the intraday chart. Here's the 4-hour. Here's the 2-hour. Here's what it looked like yesterday. Okay, there's that key resistance, last month and last week's high. Confluence 100% extension off the low, so even on the near term, you have some Fibonacci relations there. The basic 236 that we talked about, the high day close from November that we talked about, it's all stacked up right here. Momentum couldn't make it through 70. You had a lot to look at here to suggest that this is going to be a pretty critical level as we waded right into the release, failure, and here's the setback. Now, one thing I do want to note, again, is that we've made it, and we're basically sitting right now at the monthly open, yesterday's open for February. The weekly open is right here, and that's where we rebounded. So that's what we need to get through to validate more of a near-term reversal here in sterling. Downside targets in such a scenario, you're looking at 120.433 and 124. Again, no change to any of the levels. I'm still looking for a possible buy on a larger setback. The only thing I do want to adjust, guys, is the high that we used for the retracement. I'm going to go ahead and choke that up to the new high, and that brings up that 50% retracement just a couple of pips up to 23.45, 23.46. But a larger look back here, okay, keeping in mind this formation. All right, I'm starting to like it more and more. Not only because the 50 line gave you really nice pivots right here, right here, right here, but if you take a parallel, look at the highs we just made right here and right here. So the slope, I think, is right on, which is why also a deeper pullback, if you bear with me one moment, a deeper pullback, if we do get it, look at this slope pivot here. Resistance, support. If I choke it up even more, getting a little tight here, but it suggests at least a pullback into 125 we should be looking for. If not the whole pullback towards 24.33 and 23.40. But long story short, I think you're looking at exhaustion. I think you want to be looking a little bit lower near term, ultimately to buy on the sterling. And that would give the dollar, again, a little bit of a pushback to the upside, a little bit of a recovery from this drawdown. Unfortunately, that rally didn't give me an opportunity to get back on the short side. I was looking, like I said, for the stretch to be a little bit higher than this, back to the median line. So didn't get much play on the dollar here. But I digress. Any questions on sterling? Sorry about that, popping all over the place. Any questions on British pound? Here's the 30-minute. Could be a slope to work with on the decline here. Way too early to tell, but something to keep in mind. All right, going once, going twice. That's number 3, British pound. Let's start to pick up the pace here. Pound yen. Crazy pair, I know, Widowmaker, whatever you want to call it, completely broke down from resistance as well. So pound yen was also coming into an area of resistance. They were all basically on the same page, guys. I hope you picked that up from yesterday's report. Basically, they were all sort of coming into areas of resistance. For pound yen specifically, that area of resistance was essentially last month's open, I want to call it. This is on the wrong day right here. So the yearly open, which we came into, failed at for a couple of days, 3 days to break through. We talked about this yesterday. This rebound and perfect reversal off support had me still looking for a stretch back into this major longer term parallel in pound yen. Similar to what we got in pound dollar, obviously the breakdown, you're not really making an outside day reversal. It's not as impactful, I think, in my opinion, at these levels. But certainly on the near term, that near term slope that we had was completely rejected with this break here. So 143, if you guys recall the previous report, we were looking for a rally into 143.87. Whoops. Okay, and that was this region here. Once we got that push right into that region and it held as resistance and you had that slope there as well, I was looking for the recovery to find support here and possible long exposure. Again, our bullish invalidation level at 141.60. Now that we're back below that, guys, I don't want to touch this thing. The play was to play the correction into that region. From here, you have to respect the possibility of further downside. Looking at 140.61, more importantly, 139.60 now lines up with this basic slope. Basic trendline resistance. That's 618. It's interesting. I just want to know, you probably looked at the charts yesterday. It looks a little bit different on the daily chart. It looks like it converges right here at 130.80. Actually, it does here too, I guess now. Just below that 139.60 level. We can ditch that. New resistance. And I just want to see if this lines up. No. But that's what I'd be looking at. Also keeping in mind, if you keep my cursor here, the 200-day moving average comes in just lower. And then again, that trend line confluence region. So I still think you look for a new low here. One other extension, bear with me one sec, guys, I would want to check out is just 100 off the high here. And certainly that comes in 139.80 as well. So both of these regions, areas of interest for exhaustion, possible long entry here on pound yen. And in fact, if you put a little color on this here, it's resistance, support, points a little bit further down the road, but you get the picture. Questions on pound yen? Okay, number 5. This thing is pretty wicked, guys. Massive ATR. So again, not for the faint of heart, okay? Just keep that in mind. Last pound cross, and all the pound crosses look pretty messy here, but pound kiwi looks like this. Also, now testing near-term support. I think in pound kiwi is the only one of the pound crosses that we've been covering that didn't really see a major break of the lows or key support just yet. So pound kiwi, I still have within the confines of this ascending formation that we added earlier in the week. You can see the lower parallels really clean here. It is posting an outside day reversal off resistance. That resistance level here even more cleanly defined by the 100-day moving average. parallel resistance. And obviously we turned just ahead of that 50 line. Excuse me. So this whole reversal now taking us right back into the lower parallel. So I think for pound Kiwi, it's a pretty clean play as far as, you know, a downside break sub 70.35 and sayonara. This is one of those ones, again, that there's a lot of downside room if it does give out. Keep your eye on Kiwi dollar, which we'll go over in a moment. That thing and Aussie both broke higher as well. Kiwi, I'm still thinking it's not going to be a legit break. So if Kiwi pulls back, I think that's the fuel we need for Sterling Key to really find some more momentum on the upside. But the near-term bullish invalidation was 73. So remember, now that we're below here, kind of sit by the sidelines. I'm looking for some basing into this region. A break below 70.35 is what would put us bearish. Other than that, you're still looking for a rebound here to offer some exhaustion. That is pound Kiwi number 5. Okay, let's jump into the dollar crosses. Non-farm payrolls is on tap tomorrow. I see a lot of questions on the board, so I will get right into it. Let's do euro first, Theo, and then I'll hit Aussie. Okay, euro dollar looks like this. So the rally on the dollar weakness takes euro now into a near-term key resistance level, and that's 108.20. We highlighted that yet level earlier in the week. We turned just ahead of it. It was a perfect tag of the upper parallel here, this 50 line. But the significance of 108.20, 108.22 is not only a basic 50% retracement of the decline from the, this is the U.S. elections here. So this range, it's 50% retracement of it, but it's also the swing lows that you made from back here in March of last year. And you're testing that right now as resistance. So we probed right through it. We came right back below. The immediate long side bias heading into the U.S. session is at risk while below this region, keeping in mind, again, that you're getting some divergence into those highs. So could euro see a little bit bigger of a setback? Sure. Is the broader trade still constructive? In my opinion, yeah. And that's constructive above the weekly open right here. It's a 50% retracement of the weekly range and the 50 line of the current operative slope. So finally getting some clarity here in euro, which is, as you guys know, been bothering me as an ugly trade for the last couple of weeks. Finally, after we get some of that chop out of the way, some clarity here. So you're looking to buy pullbacks. You're at resistance right now. Inevitably, we want to see a rally towards 108.76. 109.36 would be the next subsequent topside target, but the bias stays constructive above 107.24. No, Juan, you did not. We're about to cover that in just a moment. I'm going to go over Aussie next. Questions on euro heading into non-farm payrolls. Watch that resistance level, a kickback. You'd look for support at the median line, which is not too far away. Again, the 50 line here converges on the weekly open and the 50% retracement right down here. Aussie dollar looks like this. That was number 6. Aussie's number 7. Here's good old Oz. So Aussie dollar record trade balance numbers. Record, meaning since I had to go back in the terminal and look back, since the data goes back to 1976, there's not, haven't seen a trade balance figures as strong as the ones we got last night from Australia. So obviously that print fueling the upside, taking us well through any type of resistance that we were expecting to see sub 76, which, by the way, has been our bearish invalidation level for the last 2 weeks. So now that we're above 76, I think we're firmly above it. Next topside immediate resistance is 77. 76.98 is the August high day close from last year. So you're approaching that. Key resistance still 77.35, even higher. That's the high day close for the year. And let's see, on the near term, you know, there's not really much to do as far as intraday trading on this, guys. I don't, you know, want to get in front of NFPs, and at the same time, it's a legit breakout. You have to see what the daily close looks like. On a pullback play, you know, maybe support near 76.25. If you find some compelling near-term momentum reversals here, maybe an area of which to look for that last assault into the 2016 high day close. But you know, I'm not really interested in playing the Aussie here, guys. I'd really need to see where the non-farm payrolls drives this thing. Again, you can see a scenario where non-farm payrolls comes in stronger than expected. Dollar sees a nice rally, jerks this thing right back into former resistance, now support. Great entry to get that vault higher. But the same respect, the one thing you want to keep as the daily chart is just breaking into overbought territory. That could be the onset, or that could be, there could be some serious upside action still on those breaks. So be weary of Aussie. These pairs have the propensity to do these AWOL moves like this. While I am expecting definitely some, near-term exhaustion heading up into this region on an intraday basis, it's tough. So who was it that was looking for a short on this? Can we look on Aussie? So Theo says, can we look at Aussie? I'm looking to short in the mid-77s. Then we're both looking to do that, buddy. Okay, so yeah, mid-77s is right on cue. Right on cue, brother. That's a big region. It now converges. Remember one thing, guys. Aussie was the cleanest pair all throughout 2016. It was the cleanest pair. Remember this formation? These three reference points, excuse me, the pivot caused the charge the break, the upper parallel caught the highs, the lower parallel caught the lows, a slope of that same angle caught the highs, right? So clean. That same slope converges right on the 88.6, the high day close for the year of last year. It's all lined up right there. So I extend that range from 77.35 to 77.56 as sort of the key range. We played off that region multiple times last year, Theo. From NFPs, could we get a spike to hit those levels and a reversal? So Theo, you could. You got to look at the propensity of where the dollar is as it stands. So the dollar has already seen and sustained some pretty big losses, right? So for that scenario to pan out, think about what you would need to see. I would need to see, or the market would what would trigger that, in my humble opinion, Theo, would be a much weaker than expected release. Okay? That said, markets are expecting 175. We've been getting pretty steady prints, 150 to 200. And I'll say the same thing I said last year, guys, or last month. We got a print of 156. Anywhere between 150 and 200 is the median range, the mean range even at this point, for what the NFPs have been getting us. And as we move into a 4.7% unemployment rate, anywhere between 150 and 200, the markets are going to be pretty much in line. If NFPs miss, let's say we get a 120 print or something really outside the line of expectations, then yeah, I think a dollar collapse into support might be the play that would push Aussie dollar right into that region, and you'd want to fade that. Because I don't think that would necessarily interrupt interest rate expectations, even if we did get that. Remember, we still have till June before the next even expectation for a hike. So a one-off print, I don't think would put a brick in the road. So does that make sense, sort of, Theo, sort of the expectation moving forward? So the propensity at this point is more so the markets are more vulnerable to a stronger than expected release for a relief rally, I think, than necessarily a weaker press to make this thing completely break down. You want to look at where the market's more heavily positioned right now. And the risk is to the upside on a strong print. Even if we get a downside, even if we get a weak read, I'd want to fade that weakness in the dollar just because we're already at the lows. All of this decline, you've seen interest rate expectations pretty much hold. Again, if we take a look at the most recent expectations for Fed Fund futures heading into June, we're right back where we were at 70%. No change on the back of yesterday's FOMC. So unless this is a super, super horrible read, I think you look to fade near-term dollar weakness. Theo, make sense? Okay, cool. So questions on Aussie dollar, going once, going twice. That's number 7. Number 8, here's Kiwi. And I'm not going to lie to you, I've been pretty stubborn. I'm still trying to short this thing, and I'll tell you why. On the near-term charts, you have a lot to look at. Here's this thing. You guys remember this formation? We drew this on the webinar yesterday, and I was all like, well, I don't really know if it's too impressive. yet. I don't have enough too much conviction on it. I'm starting to like it even more. The premise of the short is the fact that we turned right here, which is former parallel support off the lows, or former median line, and it's the upper parallel that we added yesterday. So I thought it was worth a shot with a stop against this high. It's working out all right, but I do want to see if we can get a little bit more of a trip to the downside. Initial targets right here, very close at 73.11, but then it's really 73 that we still need to get through. So the daily chart's looking messier and messier. I recognize that, but near-term price action is what's been guiding me on this one. Michael, which pair you think is reasonable to trade? So Conwall, for me right now, this is kind of the only thing I'm looking at. Obviously, heading into the NFPs, all the dollar crosses are an interest. So I'll be looking at Kiwi. I'll take a look at dollar yen with you in a moment. And Euro, same thing for a possible exhaustion play there on a dollar rebound. But right now, aside from this, I'm not in anything. I'm kind of flat. So we'll see how the NFPs pan out tomorrow. I don't, on the back of the commentary we got from the FOMC, I don't necessarily think, like I said, unless we get a big miss, or let me put it on the other side, if we get like a 220 blowout read, the argument that's being made in a lot of the bank research I've been reading is this: it's becoming harder and harder for the Fed to hold off raising rates. And if we get further fiscal stimulus and the inflation picture continues to improve, and we're expecting that GDP is going to start to uptick just on account of some of the more business-friendly policies being rolled out by the administration, then the Fed's got to do something, right? So if you get a blowout read on NFPs, or specifically like a massive uptick in labor force participation, I think that's got to play into it. Conwall. So another reason why I would like to see a dollar move higher. Okay, so that is Kiwi dollar. Moving right along, dollar yen. Here's the other one that some of you are wanting to look at as well. Okay, well, as always, dollar yen looks ugly on the near term, so I'm going to take you to the daily chart here. Here's what the daily chart looks like. As I said yesterday, for dollar yen, wake me up when this thing either hits 111.35 or rallies into 115.50, 116. Other than that, no interest. It's the abomination, does what the abomination does. Gary says, bloody abomination is abominating me to death right now. Spoke too soon yesterday about trading my gut. I feel like I'm wrong 20 out of 10 right now. Gary, yeah. Remember, the gut, I was thinking about that question once after we closed out the webinar, and one thing I wanted to say, so a good thing you brought it up again today, Gary, is one thing you want to note, man, is that your gut feeling, a lot of the time will be the retail gut feeling. And that's not what we want to go with. A lot of times if we put two people in front of the screen and we see we both have a gut feeling, yeah, the buy, just remember that there's probably masses out there that are feeling that same feeling, and I don't want to be on that same side as them. So ideally, our gut feeling is what the technicals are telling us, not what price action. As far as dollar yen is concerned, I got no interest here. Like I said, wake me up at 111.35 or 111.80 on a near-term front, or on a rally back towards 115, 115.50, 116, also a region of interest. But heading into tomorrow, on a breakdown play in the dollar, I would be looking for long entries into that region. Bear with me one sec, guys. I do just want to see what this looks like. All right. So the 618 of this decline comes in right here too. So watch the top side of this range, 111.79, 111.90, and then 111.35. It's just below the lows that we made today. Hmm. Yeah, you're likely to see a lot of chop here in dollar yen heading into the release. There's even some divergence here into the lows here on the 120-minute chart, so I would still be concerned. Guys, there's no trade here for dollar yen, at least in my humble opinion. Not from this level. If anything, put a gun to my head, I would say still look for the dollar rebound. Look for the dollar rebound. From the immediate approach heading into U.S. session, look to play that rebound to the downside for an initial tag of 111.35, 111.80 first on this play. All right. That is dollar yen. Any questions on dollar yen? That's number 9. I do want to cover the rest of the. Oh, Pooja saying I don't like the 5-minute on Kiwi dollar, 1-minute even. Looks like it's panning out all right. Getting some divergence into the highs here. But we shall see. Gary, or Pooja, let me just run through the rest of these. If we have time, we'll come back. Gary says, I hear you. Cheers on that, Gary. Okay, crude, silver, and nat gas, and then I will go over copper for Sarub. Crude looks like this. All the commodities have broken out, except for the fact that for crude, are you bored yet? You know what's coming. It's the weekly chart for crude. Okay, I don't know what you want to do with that. Do you want to get long into resistance? I sure as hell don't. Comwall, dollar CAD. Did we not cover dollar CAD yet? We'll do dollar CAD too. I can't believe I forgot that one. Okay, so crude coming into resistance. I don't want to touch this thing. Again, I don't want to be, let me take a step back. Looking for the dollar rebound to possibly help the short side here. On the intraday chart, though, there is nothing to suggest that we want to be trying to fade this just yet, except for the fact that we're coming into the basic highs that we made here back in December. It is a longer-term 764, retracement, much longer term. And again, that's slope resistance. So at this point, you can scrap this pitchfork that we were working with earlier in the week. You can scratch this retracement. There's a new high. You can scratch this retracement. 786 is right there as well. Let's go ahead and add the 88.6. Oops. And there are your 4-hour levels, Comwall for crude. Okay, no change pretty much as far as the upside target. Okay, you're at resistance, you're at initial resistance. 55 is like the rock solid ceiling. Look for a dollar price action heading into NFPs to really drive this thing. If dollar falls apart, 55 is going to pop, and if it pops, guys, there's not much to stop this thing from going up another 10 bucks. Okay, into the 60 range for sure, and that would be just a basic 38.2 of the retracement from the highs that we made back in what 2012, 2011. So the weekly chart on crude is pretty darn clear. Pretty darn clear. And if the 55 level gives out, you know, don't stand in the way of this thing. So that's all I got to say about crude. I'd be looking for possible resistance. If the dollar pops higher tomorrow, look to play the pullback. That's number 10. Let's jump into silver. Looks like this. Okay. I highlighted this chart yesterday on Twitter. We're in the confines of this really nice near-term slope. Let me start by the daily chart. The reason I'm starting to get concerned on the long side in silver specifically is because of this. So these slope lines that we've been following off the highs here, which have caught some really nice levels, obviously if you extrapolate that from the high that we made back in November, we're testing that right now. It's also a confluence of the basic 38.2 of the entire decline, and just higher. You have the 200-day moving average, another parallel of that slope extending actually off the highs, and that's up at like 1785. So I think you're coming up on some pretty major resistance, but near term, you still could see some more upside. Here's what it looks like. So this ascending median line formation, this is more near term, just on the advance. We were holding below that 50 line. This was also a 1618 extension of the advance off the lows. Whoops. Actually, we're testing that now. Sorry about that. and we're testing near-term resistance as momentum gives you not the strongest, but some divergence here. Let me see if the near-term chart a little bit clearer. Here's a 2-hour into these highs. So possible pullback play. Still looking for a possible stretch in 1788, but this is where you want to take a little bit more of an assertive stance as far as resistance is concerned. So the long and short of it is all the commodity plays basically look very similar in that they've made a pretty big breakout, but that breakout near term is heading into some resistance. So keep that in mind for silver. It's actually a pretty clean play here, Conwall, as far as the silver levels are concerned. Again, the daily chart. For anyone who's new to the room, I do see a couple new room names here. Guys, you can always take a quick picture of any of the charts that you see by clicking on the camera button, top right-hand corner of your screen, and saving the chart if you do need to refer to it later. So feel free to do that. Silver, daily, and intraday. Okay, that's number 11. Nat gas, number 12, looks like this. Nat gas, oops. No change on this, Conwall. I don't really want to even spend too much time on it. It's at the same support barrier we've been talking about for the last 3 days. 100-day moving average, 50% retracement, former swing highs from back here in, May of 2015. Also the median line, which converges all right here. You don't want to get short into this region. If we do break below it, look for a move on 312. The only thing that would put me on the constructive side, it would be a break and a breach above basically 337. That's also the weekly open and the weekly opening range high. But right now you are at support. Plain and simple. Momentum sitting at support as well. So it gives you a lot because this is the opening range low for the year, the January lows, key support, momentum sitting at support. So the invalidation level is very clear here, okay? If we see a downside break beyond this region, let's just call it 309, you're basically looking for a validation for a close below this to continue the downside move. And in that scenario, you know, there's a lot of room to the downside. Let me just see what this extension looks like, by the way. If we do break, look at initial target at 302, but then 290 would be, 293 would be a downside. Sort of a big downside target. All right, but near term, immediate downside bias is at risk while above 311. Looking to go long nat gas, please advise on the levels. So those are the levels. Sarup, did I just miss your question, or are you asking that post the explanation? Those are the levels I'd be looking at. You're basically a 307 last, this is 2 weeks ago, the January low is kind of your invalidation. If it breaks below that, forget about it. So any stops that you take on the long side or any long exposure, that would be my stop. Obviously, a break of the highs that we made yesterday would be a start, but key resistance is way up here. So you have some room. Just note that you're at a key support level right now. Okay. That's number 12. I'm making good time. Got 10 minutes. Let's see copper for Sarup. It's number 13. Quick reminder also, guys, we do have Jamie on tap at 12 o'clock, midweek strategy webinar, so don't forget, take a little bit bigger of a view and some of the longer term setups he's following. Copper, copper, copper. Here's copper. So, you know, pretty good response here, Sarup. We went over this yesterday. Any specific questions on copper? Remember, it's all about 272. We've been talking about this for months now. That was the measured move of the objective break of the consolidation that we were in for the larger part of 2015, and that's still the level to beat. That's still the level to beat. I'm short looking at levels to close the position. Oh, okay. Let me get into that for you then. Let's see here. A new high was registered and overnight. Okay, basic 38.2, the opening range low and a pivot in price gives you 263 into 262.7, so let's just call that 263. You made it back below the weekly open, which is certainly something that also bodes well. Divergence, strong divergence on the final 3 points of the upside here, which is also a very good sign of near-term reversal, near-term exhaustion. Let me ask you this, Sarub. Are you looking to make this a swing type of position for longer term, or is this something intraday? Is your entry north of 270? Intraday. Okay. So if it's intraday, entered at 272. Oh, awesome. So you got a great entry. Intraday, I'd be looking at something much short term like this. Let's just see if this slope has anything fruitful. Keep resistance right here. Keep support right here. On the downside break, though, this is really what you want to look for, is that basic trendline support off the lows that you made from December. Now, this is I just threw this on here right now. I don't know that this is in play. I can tell you that the initial moves and touches look pretty good, specifically on the way down with the 50 line, back on the way up, catching the upper parallel. So that would give me a little bit more of downside immediately here. Yeah, and look for Friday's low. That's what I would say. So here's your weekly open. Just ahead of the weekly opening range low. Let's do that. And initial resistance should be back at the weekly open specifically now because it's at the 50 line, but bearish invalidation is actually still below your entry. So as long as you stay below 271, I actually still like this to the downside. Would help if we could see some dollar strength here or dollar reaction. Let's see if non-farm payrolls could be the print to get it going. But Sarub, that's what I'd be looking at here for copper. Let me know if that helps. It says thanks. You're more than welcome. Okay, dollar CAD. I can't believe I forgot that one. Conwall coming right up. Here's what dollar CAD looks like. I completely agree with you, Sarab. DXY strength is needed. And don't get me wrong, guys. On a broader picture, I still think dollar, long term, the dollar is constructive. Near term, it's all about whether this correction has more to go or not. Okay, but I don't think anyone's arguing that. The picture here is still within the broader uptrend. But dollar CAD. Conwall, I'm just as frustrated as you are. Conwall was just chatting with me earlier ahead of the webinar saying, what's up with dollar CAD? What's our bias now? Like, what's the deal? Is this thing finally going to base or what? This is all I had to say. It was encouraging. I was looking for the rebound yesterday. Didn't play out. Again, we were looking for a rebound all the way to that 200-day moving average, the median line. It failed ahead of it before pulling back, and here we are back at the lows. All I can say, guys, is we've continued to hold this lower parallel. I don't know if it's a break. I don't think it's a break. I don't trust it because we've been getting some ongoing divergence. I don't trust it because, again, we're heading into NFPs, and I don't trust it because crude is at the highs and at resistance. So I got no play on this. Again, a gunshot to my head, I'd have to say go long, but we are below 130, and if we stay below 130, a 29.60 break is, like I said yesterday, my last ditch effort. If it breaks below that, you're looking for 28.80, 28.30. There's tons of downside targets into the 2016 low day close. And as we always note, a downside break of a descending pattern typically is the sharpest part of the move. Just like an ascending, a breach of an ascending pattern will typically be the sharpest rally of the move. So certainly from the risk standpoint, if we break below this 29.60 level, which I've dubbed as sort of the last mark, there's tons of downside. This thing could completely fall apart. So you're still above the median line. The risk is still there for a rebound. I think you have a pretty well-defined, level of which would invalidate the whole rebound scenario. But definitely something we'll be watching heading into NFPs tomorrow. Again, if we get the dollar rebound, my favorite dollar recovery play would be dollar CAD. And dollar yen for that matter. Specifically, if dollar yen is able to ratchet down into key support first, that would be also for a favored dollar strength play would be dollar CAD and dollar yen. Heading into NFPs tomorrow, my favorite dollar weakness plays. So if the dollar breaks down tomorrow, my favorite plays in that scenario would be a sterling dollar play or even an Aussie dollar play. It really depends if Aussie is able to make headway today and finally hit that topside target before it turns around again. If not, this would be sort of the stretch I'd be looking for in Aussie on a weaker dollar play. But that's the game plan, guys, moving into tomorrow. What else can I say? Any other questions or trade setups? I actually wrapped up just a minute early here. Any other questions into tomorrow's event risk? Says I got frustrated and closed my position, says Conwall. Look, there's nothing wrong with being light into non-farm payrolls into the first week of February trade, guys. There's going to be tons of opportunity coming up. There's a lot of event risk on tap still, and we're just getting the year started. So it's okay. If you're playing it a little bit light still, it's okay. I've been all over the place on Aussie, on Kiwi. You guys know on dollar CAD earlier in the week. We had a nice run on that. Pick and choose your battles, Conwall. Don't force the trade. Once we get the technical clarity, which I'm sure we will get, we'll be a lot more aggressive on getting in and out of these things. Okay. All right. I'm going to wrap it up here then. Best of luck trading, guys. Keep in mind, again, non-farm payrolls on tap tomorrow morning. And also, Jamie will be on tap in just a couple of hours, 12 o'clock Eastern here in New York for the midweek strategy webinar to go over some of the swing trade setups that we're currently in and the outlook for the setups moving into February trade. Till then, best of luck trading, guys. Have a great weekend. And I will see you again, remember, on Monday on Daily FX, Open Public Seminar, and then Tuesday, Wednesday, and Thursday right back here on SB. Best of luck trading. Cheers.